Okay, Recons video on Sunday, the 18th of September 2022. It's just gone 6:07 a.m. Chicago time. Do hope you are doing well. So this is the weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. And that was one heck of a week. We had pretty hot CPI numbers come out on Tuesday, and seemingly the nice little uptrends that we'd seen building last week were destroyed kind of overnight, and we ended up being down for the week in most of the major markets. So I don't know how you're feeling right now. You're feeling kind of despondent, like that's it, that's the end, it's like it's all crash and burn from here on. I'm not so convinced, and the reason for that is the professionals need weeks and days like this to kind of take their big positions. So when you see a lot of volatility, a lot of volume kind of going through, just beware. The professionals are jamming it kind of up and down in order to kind of get position for the next kind of big leg. So although it's kind of melted down some of our support kind of levels, it's not all bad news. So let me show you what I'm seeing first of all on the E-mini charts with some volume to start with. So this is better volume on the weekly chart. So 13.2 million contracts traded on the E-mini this week, and that was the largest number that we've seen in 2 years. So we have to go back to the meltdown, last kind of meltdown that we had, COVID meltdown here, to see a similar type volume kind of going through. So the question is that a pattern that kind of gets this move going, that we end up kind of going down to revisit these kind of COVID lows where we see a similar type of volume kind of pick it up? Or is that just getting rid of a whole bunch of sellers, people being panicked out of the market, and we actually kind of reverse and go the other way? This week's going to be absolutely key to determine what that is. One of the reasons why I'm thinking that we might hold at these levels is on the daily chart. You can see here we put in 2.2 million contracts on Friday, and it's a high churn bar here. It shows up with blue on the better volume indicator. On the price bars, on the volume bars, it's actually a green bar. Not sure why I did that coloring originally, but anyway, one of the reasons why the blue coloring on the bars with high churn like that is the same coloring I use on professional bars on Better Pro-Am, is that when we see high churn, that is when the professionals are kind of active. They need that large volume to go through the market, and particularly high churn means relatively high volume, relatively small range. So the range is compressed, and that's because the professionals are kind of either picking it up at the lows when we see one of these high churn bars at the lows down here, or like this is a classic one here up at the highs, high churn bar here where relatively large volume, relatively small range at a high, and they're kind of selling it down instead of preventing the market kind of making an advance here. So that's one of the reasons why we've melted through some of these important kind of support levels. But if that holds, Monday, Tuesday we get above the highs of Friday, Thursday, Friday above 4,000. That was an important week this week where we just kind of jammed it down. The professionals jammed it down, caused a little bit of panic selling, and picked up a lot of volume kind of along the way. Let's look at the cycles and show you what's happening here. So daily chart, this is the more traditional view of the better indicators where we can kind of zero in a little bit. That's why we have two charts side by side. Left hand side, everything to do with volumes. We've got better momentum below the price bars, which is a volume based momentum indicator. On the price bars themselves, we also have better Pro-Am, professionals in blue, amateurs in yellow. Right hand side, better sine wave, everything to do with price. So this is calculating the cycles in price in 3 different time frames, and we're playing on this chart here, we're playing with this important support at 38.25 on the highest time frame. So because we've got this high support coming in on the highest time frame, we ought to be looking for opportunities to kind of go long. So we come back down, we had a nice little kind of leg up last week, and then with the CPI numbers it kind of got destroyed, and we busted through that support on the daily chart. So what that means is the next level of support we need to be looking for is being caught by the next highest time frame. So that's when these two lines kind of come together, the intermediate time frame. Looks like we're a couple of days off that, so Monday, Tuesday is going to be absolutely key. If these kind of cross, come together, we put in some support over the next couple of days, and we rally from there. That was just another kind of push down test into those lows. The good thing about this is, just like this low had a whole bunch of blue professional bars, with this week's activity we had 4 blue professional bars, Tuesday, Wednesday, Thursday, Friday, bang, bang, bang. And so if we get back above that kind of breakdown level there, that shows that the professionals were picking it up at that point. So on the daily chart, it does look as if we're a couple of days away from that support kind of coming in. Break it down to the 135-minute chart, and those kind of levels that we're looking for, resistance to support down here. So we put in a nice little pullback to end of trend on the lowest time frame. These thick lines have to come together for that to hold, and that's why you can see again we're a couple of days from those kind of coming together, but we're absolutely key levels here. We put in exhaustion sell and bullish divergence. We've got blue professional bars kind of coming in here at the lows, which is kind of shows they're picking it up at those points, but we need to break back above the highs of that kind of sequence there to show that the professionals are really picking it up at those lows. 4500 tip bar chart's been a pullback to end of trend down here, more blue professionals there and so on. Highest time frame, blue professional bar is in, so this area needs to kind of hold for us to rally forward. And the 15-minute chart, we're just putting in pullback to end of trend there on the highest time frame. So let me just zoom in on that. Oops, what have I done? There we go. So this one's put in pullback to end of trend on that highest time frame. It's still white bars here, showing that we're in a downtrend on the 15-minute chart. Maybe we need to put in a little pullback to end of trend on the lowest time frame there just to test into those lows, 3850s. But we start breaking back through resistances into an uptrend and these start turning red, then we're in an uptrend, and last week was critical for showing us that the professionals were using last week's activity to kind of panic people out of the market and kind of get in. So Monday, Tuesday is going to be key. Let's see what happens from there. Just as an aside though, that high was made Monday into Tuesday. That's the CPI number comes out pre-open, and then we have the crash, 100-point down, kind of gap down there. It was a pullback to end of trend on the lowest time frame, syncing up with cyclical resistance on the highest time frame there, and then coming into that pattern. We knew that it was weak because last week we had Rambo patterns, a whole family of them there, into Monday's activity, bang, 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 and then it kind of crashes from there. So I'm not particularly despondent on the E-mini, and actually as of Friday midday or so I'm kind of long the E-mini. This week's trading for me, beginning of the week I was short gold, we had some nice signals there, then short crude. Again, midweek we had nice signals there, and at the end of the week I'm kind of long the E-mini, again holding into a weekend, but I'm not particularly worried about that. Let me show you the signals on the precious metals first of all. So gold. So with last week's video I said silver was rallying but gold was not following along, and we typically see the two kind of move together. We had more triple signals, bearish short signals into Monday, Tuesday's activity, and that's why I was short. Couldn't get through that 1740 high up here, bang, we crashed down. Nice signal here, that's a stair-step trade where blue professional bars kind of come in on the retrace, bang, and we follow it down all the way down to, what did we get to, kind of 1660. It was a big number. I was out at 1700 on that short just because it was a round number, and I was happy with the profit I've made, but it did double that distance until we saw exhaustion sell, bullish divergence and flush patterns kind of down here, and now we've got a triple signal on the way up. Interesting on the daily charts, gold is starting to look interesting. A lot of volume kind of going through this week, and again keep on saying it's like, when you see a lot of activity in the market, a lot of volume, a lot of kind of volatility going on, that's the professionals are using that activity to take bigger positions. Silver, so this was the signals that we had in silver the prior week, and we ended up in a nice rally. Whole bunch of blue professional bars taking profits at 20 bucks up here. We hadn't seen that on this rise, and so on, so that's when they took profits, but no exhaustion buy, no bearish divergence, so it didn't generate a short signal, and silver is kind of holding in there at that point. So we're in a little bit of no man's land. We know there's profit taking at 20 bucks, but if we test a little bit, blue professional bars kind of step in, we might get through 20 because we have not seen exhaustion buy. So precious metals are looking kind of strong not strong at the moment. They're looking for an area to hold, and maybe we have a rally this week in precious metals because they're both kind of pointing the same way at the end of this week. Bitcoin, as usual, nice and volatile. So we'd had long patterns, long signals into these highs up at 2250, and blue professional bars kind of came in here, bang, triple signal, sell it down. But we're now back down, bottom of the range, 1950, and more signals trying to make a low kind of down here with exhaustion sell bullish divergence at those lows. We've got some blue professional bars coming in here and here. That's kind of nice for a little bit of a pattern, but we still need kind of confirmation. So either a break through this level here, or blue professional bars kind of stepping in for a nice stair-step trade there, would signal long in Bitcoin. Now, Euro did not get a signal to go short here. We were kind of signaling long the previous week, and I was talking about was this the opportunity to see a major breakout in the euro, kind of above 2.5, because we'd had nice signals here. We'd had signals in the prior week, and we'd had a whole bunch of blue professional bar kind of test at 99.5, and we'd rally from there. But Monday into Tuesday, we got all these blue professional bars taking profits up here. No exhaustion buy pattern there, but that was the CPI number comes out, bang, and it kind of sells down hard. But now we're catching around parity kind of here. A couple of signals kind of gone off. So we've had blue professional bars here and this level here. So for me, it's not all over with euro. Still watching to see if that kind of area does hold, and we kind of get back up through 2.5, and that would show that we've reached a serious inflection point. British pound and Aussie dollar, not so much. This was the sell-off, exactly the same timing. The CPI number kind of comes out, and we kind of sell off here. Didn't generate a signal because we didn't have exhaustion buy there. This ended up being a poor signal into those highs at 17.4, and we've kind of sold off super hard. No blue professional bars kind of come in yet, so British pound isn't holding. Aussie, I think the same thing. That kind of got destroyed. That CPI number kind of came out. A whole bunch of blue professional bars at that sequence up there at 69, and then bang, and we've had no blue professional bars yet. So we didn't get signals on those. Japanese yen maybe starting to hold like the E-mini. So we had some short signals at the beginning of the week into that move there, and at the lows we've had exhaustion sell bullish divergence come in, and a little cluster of blue professional bars, and we've come back down to test into that area, and more blue professional bars, sign of strengths kind of going on here. So that might be interesting for the Japanese yen and the euro, so we're going to be looking at those pretty closely this week. This is the E-mini with the signals we had last week into those highs, and then it got destroyed with the CPI number kind of coming out. No signals, no exhaustion buy, not a lot of blue professional bars into those highs, so that was kind of unexpected with that decline. And then we've started with Friday's activity starting to build here at this point. Exhaustion, sell bullish divergence, blue professional bars kind of come in here. Oversold obviously with Friday's activity. So tend to be early into these moves, so possibly Sunday, Monday we're going to test back down into those lows. Wasn't a whole bunch of blue professional bars at the lows here, but that was interesting. That's what generated our signal, and we closed pretty strong. So let's see how we open up on Sunday and what happens on Monday. Beginning of this week is going to be absolutely key to see if some of those high level supports kind of come in on the E-mini. So we've done the Forex, we've done the E-mini. Let's look at the 10-year notes down here, and finally we've got some patterns kind of coming in. Although this signal, there's more blue professional bars at these highs than there are at the lows. Another exhaustion sell kind of down here. So we're finding some kind of area of support in bonds here, but not particularly convincing because of that number of blue professional bars sitting as a shadow that effectively is going to trap us for a while until we kind of test into that and generate enough blue professional bars to take that group out. So there's bonds, gold, silver, Bitcoin we've talked about. Yeah, crude. So here's the signals in crude. We got the beginning of the week. So last week we had a long signal here. Nice test down, blue professional bars kind of step in. We go for, what is that, a $6 rally, something like that, and then we get a whole bunch of blue professional bars kind of coming at the highs, and that's why I took my signals kind of short in crude. So that was good for $3 or $4 on the way down. We're kind of holding at the moment, but we've not generated kind of long signals there. Let's see what happens on crude. Natural gas was similar to crude. We have a rally, blue professional bars, exhaustion patterns here at the highs. We kind of crashed down. We've not seen exhaustion sell on the downside, nor blue professional bars picking up on the downside there, so natural gas is still weak. Copper Copper, we had nothing kind of going on last week, we had nothing going on this week, so we're just kind of a little bit range bound in copper. So with the ags, we had signals kind of in different directions. We had weak corn, and then we were strong soybeans and wheat. And let me show you what happened. So corn, yes, we kind of maxed out and then started to weaken, but we've come into a couple of blue professional bars and kind of held it at that point. So the sell-off in corn, pretty good, but we've had a reverse signal, not a whole bunch of blue professional bars. So wait and see what happens with that this week. But soybeans, we were looking strong at the end of last week, and because we had signals at the lows, all these exhaustion patterns, blue professional bars coming right at the lows there, we rally, and then we have this explosive move up where the blue professional bars kind of kick it higher, and we go up above 1500. Come back down right into the zone, this kind of area of professional activity where we've got kind of between the lows and the highs, and they've seemingly held it here with a stair-step trade. Blue professional bars kind of step in at that point there. So the 34 levels got a hold, but soybeans looks like wants to continue rallying, and wheat also looking strong. Blue professional bars at the lows, exhaustion, sell, bullish divergence. We've triggered some signals, some exhaustion patterns, getting the move going. So let's see if that area holds. If we test into a blue professional bar, have a stair-step trade there to go and look at the highs. So let's see where that trade goes, Sunday into Monday or Tuesday. If I've got that right, it'll be the first place that it'll catch, and then the uptrends will kind of continue in maybe the euro, the Japanese yen, crude, and so on. So I'm not uncomfortable kind of holding that at the moment, but let's just kind of wait and see. It's going to be an important week next week. Anyway, there we go. Hope your trading is going well, and looking forward to next week.